Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. And joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Luton, as well as Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Good morning.
Happy Friday.
Certainly a skyrocketing kind of Friday. Let's take a look at Bitcoin. The CoinDesk Bitcoin price XVX index is at $47,290. Bitcoin is up about 9% over the past 24 hours. And the CoinDesk ETX Ether price index is right now at 3,228. Taking a look at the DeFi index, CoinDesk's DFX is at 585. DeFi and ETH both skyrocketing in line with Bitcoin. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. So, Lawrence, we're seeing Bitcoin absolutely take off just in the last 2 hours. What's going on?
Yeah, it happened around 6:30 or so in the morning, New York time. And what was interesting to note is that there was a premium on Coinbase versus Binance of about $200. So that usually they're prices in Bitcoin kind of line up. But when you see a premium, that means that there's an extraordinary amount of buying on an exchange. So it looks like whatever purchase that happened that shot Bitcoin up as high as it did, several $100s, and then some at about 6:30. That had happened on Coinbase, and that's been confirmed elsewhere that some amount of buying, at least a large amount of buying, happened on a U.S. exchange, i.e., Coinbase. So that's what we're, that's it. Could be a U.S. buyer, it could be a buyer moving things
right now.
Pretty much. I mean, things were kind of okay. It was not exciting, but here we are.
Emily,
and it could, we can't read too much into it in the sense that we don't know if it's an institution buying for interest, because they're trying to up their portfolio, or if it's somebody moving money out of Asia, an Asian exchange, and into Coinbase. But then again, you would see other things happening. So,
Emily, I wonder if this has anything to do with Fed Chair Jerome Powell's comments the other day, saying that he has no intention to ban cryptocurrencies, but there may be some regulation going after stablecoins.
Sure. So it's possible it's related to that comment if you just read the headline. If you've kind of been following the U.S. regulatory framework, there's nothing particularly surprising about this headline. No top-level U.S. policymaker has ever seriously suggested that they were about to ban cryptocurrency. And in fact, Powell was just clarifying comments that he had made earlier. So this narrative of the U.S. is on the brink of banning cryptocurrency is fundamentally flawed. But yes, if you just look at the headline and it says the U.S. will not ban cryptocurrency, maybe some traders are reacting to that. But, it's a little bit of a straw man.
Right. There is one I certainly know of, Brad Sherman. He is intent on banning cryptocurrencies in the United States. We'll see how far he gets with that. But with our next guest, he may have some comments as Fed Chair. Just to reiterate, Fed Chair Jerome Powell spoke before the House Financial Services Committee the other day, saying he has no intention of banning cryptocurrencies. He did signal that stable coins may need regulation, but when asked about earlier comments he had made about CBDCs replacing private crypto, Powell said he'd misspoken. So joining us now is Congressman Tom Emmer of Minnesota's 6th District. Welcome, Congressman. So you are a member of the House Financial Services Committee, and Powell made some comments before the committee yesterday. What was your reaction to his remarks on further regulation of stablecoins? And he had misspoken regarding CBDCs replacing private cryptos.
He'd misspoken. Understatement. First, good morning, Christine. Great to see you. Lawrence, Emily, wonderful to be with you again. The Fed chair is not so sure what he wants to say. I'm not exactly in agreement with Emily. I think that is a reasonable viewpoint that Emily suggests. But you got to understand, the Fed chair back in March said that cryptocurrency is just like gold. And then he came out and he said, the reason to create I think it was just a few weeks ago, came out and said the reason to create a central bank a digital currency is because it'll eliminate the need for cryptocurrency and stablecoins. And now yesterday, because I think he understands how controversial that is, when you have over 55 million Americans already in the Bitcoin, in the cryptocurrency market, and you have a $2 trillion market and growing, it's not going to go away. So that's the point, Emily, that I agree with you. They're not going to be able to stop this. The problem that we're having with these people is that these mixed messages they keep sending are creating a lack of clarity. And I believe not only are they risking driving innovation and entrepreneurs outside of the U.S., but they already are driving different opportunities off our shores. So I sent a letter just 2 days ago to Chair Powell. Perhaps that's why, with, by the way, some of my fellow members on the blockchain caucus calling into question his comments. I guess it was July that he made the comments about, we won't have a need for cryptocurrency or stablecoins if we have a central bank digital currency. So perhaps I'll throw it back to you three. Perhaps that's why he threw out the comment yesterday. Oh, no, we're not interested in eliminating cryptocurrencies. But I'll just point out to conclude, he's had mixed messages and different messages since last March, which is why we sent him a letter and asked him, what is the Fed doing to try and ensure that this cryptocurrency industry is going to be allowed to be part of the options when it comes to financial services in the United States?
So, Congressman Emmer, that's a really interesting perspective. So, just to be clear here, I agree with everything you said, and you're right about his comments in the past. But in my view, there's a pretty big difference between saying, CBDCs will eliminate the need for cryptocurrency. He's kind of saying it will serve as a replacement, and actually saying that the U.S. government will ban cryptocurrencies. And I guess the question is, have you actually ever thought in the past there was a risk of somebody, in the federal government, like at the top level, actually banning cryptocurrencies? That's sort of my point. I've never really felt that there was any momentum for that extreme a position, but please correct me if I'm mistaken.
No, Emily, you and I are in agreement on that. I go back to Christine with Brad Sherman from California. He's the only one that I've heard that has that strong an opinion. I do think, however, our people in the federal government, specifically the executive branch, whether we're talking about the chair of the Federal Reserve or governors in the Federal Reserve, where we're talking about Treasury, whether we're talking about the SEC, I do believe that they are trying to gain control over the cryptocurrency industry and direct it. And that really isn't conducive to growth and entrepreneurial activity and opportunity.
Congressman Emmer, taking it from a different angle, though,